the first basic question is going to be how you can set up your LLC as an entrepreneur or even as an investor, if they are the same in that sense. But how do you go about doing that? What's the best way to do it so we can save on some taxes?
Yeah. So first of all, is understanding the resources that you have to set it up. Like I don't believe
If they
in
are the
going
same.
to other like websites to do it. It's a completely free website called LLCuniversity.com,
Okay.
and it walks you through how to set up an LLC in any state, and not only teach you how to do it, but it educates you as well. I believe that information changes situations. So I recommend people go to LLC University. Follow the prompts to set up an LLC in your state. Depending on what state you are, is going to be potentially different prompts. So you want to first make sure your name is available, register your LLC with your state. Then you want to get your EIN, which is your employer identification number. So now you have your articles of organization, which is for the document for your LLC.
Right.
You have your EIN document, which is your business's social security number. Now you can take these two documents to a bank and set up a business bank account, because what we're not going to do is we're not going to have our personal and business money come out the same account. So we're going to set up a business account, and we're going to have all income from our business go there. All of our expenses from our business come out of there. And that is just a quick, easy step on how to set up your LLC properly for your business.
Okay. So now when I set up my LLC, it was done as an S corp. Now, can you explain what the difference is between that and like just setting up like I guess a standard LLC?
I can do you one better. I can give you what's called my entity creation flow chart, and it basically says what entity you should have at what stage in your business. Would that be
Okay.
helpful?
Yeah.
Okay, so before you start the business, you're already a sole proprietorship. Most people don't know, like the moment you say like, "Oh, I'm in business," like you're a sole proprietor. So you don't have to file any paperwork for that. You're all good to go.
Okay.
Now, I recommend you set up your LLC before you start selling your products or services, because LLCs help you from an asset protection standpoint, right? So if you don't have an LLC in place and somebody tries to sue you because you gave them wrong advice, or your product made them choke or whatever, they can
Right.
sue you personally, take your personal home, your personal money, your personal investments, all that. But when you have the LLC in place, it protects your assets, so they can only sue what's in your business and not sue you personally,
Right.
right? So before you start the business, before you actually go in business, I recommend you set up your LLC so you're protecting your assets. Now, a LLC is a perfectly good entity to stay at until you start making over $40,000 in net income.
Okay. I
Okay,
didn't know that. All right.
say it again: $40,000 in net income. So if your revenue was 100,000 and your expenses is 40,000, you have 60,000 of net income, meaning you should be a S corporation.
Okay.
If you don't have that level of income yet, you should not be an S corporation, because S corporations, the taxes cost more to file. You have to have a payroll software. You have to have all these things, so it don't start financially making sense until $40,000 of net income. Once you have $40,000 in net income, you want to upgrade your LLC to an S corp, and the S corp is perfectly fine to stay at until you start making about $3 to $5 million a year, which you might want to switch an entity after that.
Okay. So do you have to? This is like a like kind of I don't know, but do you have to do an ad in the paper with the S? Because I didn't have to do that with when it was set up for me.
No, no. S
Okay.
corp, you literally file one document. Tax form 2553 is an S selection form, and you file that one document, and you're able to upgrade your LLC to an S corp.
Okay. So how do you go about paying yourself out of your
Mm.
out of your LLC?
Now we
Because
talking.
yeah.
Now we talking. Now we talking. Okay, so guys, we have an LLC and we have an S corp. You pay yourself in two very different ways. Okay, so when you have an LLC, I'll start there. The way you pay yourself from an LLC is simple. You simply transfer the money from your business account to your personal account. You can do that via Zelle transfer. You can do that via wire transfer. So when you pay yourself from a LLC to your personal account, just do a transfer. It's called a owner's draw. Okay, it's called owner's draw, and it's very simple. You can do it as often as you want or as little as you want. Now, when you upgrade to an S corporation, things change. When you have an S corporation, you must. Did I say might or must? I
You
said
said
I said
must.
I said must. Okay. You must pay yourself a salary from your S corporation every year. If you do not, it is the quickest way to get audited. So if you have an S corporation, you have to run payroll using a payroll providing software like Gusto or ADP. You have to pay yourself payroll at least once a year, and you have to pay yourself a reasonable salary. Now, I deem a reasonable salary to be 30% of your net income at least, but you have to pay yourself a reasonable salary at least once a year. If you don't, you have major problems.
Wow.
Do you have major
so
problems?
what he's saying is spot on, guys, because I have S corps
Yeah.
and I have LLCs too, but the S corp is what pays you, pays me, pays a bunch of people. You know what I'm saying? So that EPS corp, that salary is very important, because oftentimes I don't think people really understand when you out here running a business, you have to run a business.
Yeah.
You know what I'm saying? Like, it's a business that you have to run, because you got your uncle Sam always watching.
Right.
So yeah, salaries is very important, and it helps your business too. You know what I'm saying? Because it lowers, it gives them more expenses.
Right.
So it's in the best interest of you as the business owner to pay yourself a salary. And then on the flip side, now you're paying yourself a W-2.
Yeah.
So
yeah.
now when you go for financing and everything like that, you can say, here's my W-2s.
Right.
Here's my pay stubs. Here's everything that you need. So it makes it actually a little bit easier for you to get approved for financing.
For
For real estate.
Oh, for real estate.
Exactly.
So can you do like so with an S corp, can you just take money from your business to your, like, it doesn't work with that at all?
Yeah, so your questions, bro, too. So your questions are
Yeah.
amazing.
Well, you said with an
because
S corp.
you're asking for yourself, which is a legit question. So yes, so you can pay yourself payroll, right? Because again, you don't need to pay yourself more payroll than needed. That's why I said 30% of net income. If you
Okay.
need more than that, you can simply transfer money from your business account to your personal account, right? So you don't need to pay yourself a salary any more than you need. But if you need more money, you don't want to run payroll, because here's the thing: when you run payroll, you have to pay payroll taxes on that money. The other
You have
money
to pay
that
payroll
you have in your
taxes
business,
also.
yeah. So you have to pay. So like if you pay yourself $100,000 salary, you're going to pay 15.3% in self-employment taxes. So that's an extra $15,000 in taxes you're going to pay for paying yourself a salary. But it's needed. But the rest of the money completely avoids self-employment taxes. So let's say your business had $500,000 in net income. You pay yourself that $100,000 salary. You pay payroll taxes on that, but the other $400,000 completely avoids self-employment taxes. That's why S corps help you save so much money in taxes, because the LLC, you're paying self-employment tax on every dollar of net income you have, but with the S corp you don't.
So let me chime in with this, because I want you to break that down a little bit more in layman's terms, because I know that probably went over your head what he just said.
Yeah.
Right?
I got excited, bro. I'm sorry. I got excited.
No, you good. That's why I'm here. Right? So for you, Tukes, in the audience, what he's basically saying, you do 100,000 salary on W-2.
Right. I got that.
That 100,000 is basically 115,000 that your business is paying out because of the payroll taxes that you as the business is paying the payroll taxes, right? But you as a W-2, you still got to pay your state fed taxes on that 100K too. So your 100K is being taxed. So it's like you get twice taxed on both ends. You get taxed on the business side and you getting taxed on the personal side. Right? Now, that 400K that's left over, or the 385, because you got the payroll taxes of the 15,000, you can do a distribution to your personal stuff.
Okay.
Right? And then you'll get a K1.
Hey man, look, I don't know if you gotta. You might as well put the CPA next to your name, brother, because I know CPAs that don't know half what you know, brother. So look,
well, look,
if I was able
Carter,
to
brother,
you,
I'm running businesses in real life. This is like, you know what I'm saying? We do this every single day. But you'll get a K1. But now that's why it's important for you to own real estate, because now if you do a distribution, let's just say to your personal name, I'll keep it there. You do a distribution, now that's basically like a 1099 for a business owner, right? So now you need expenses on your personal side, so that way you're not paying taxes on $385,000. You see what I'm saying? Because now you're gonna owe money on that $385,000. The business don't pay the taxes.
Right.
Now you're going to pay the taxes. So what I do is when I do distributions from my corporations, I don't do it to my personal name. I do it to another business.
Oh, this guy over here. This guy's cheesing.
I was like, bro, I'm in my happy place, bro. We talking deep. I'm here for it.
Talk to him, Carter. Tell him how to do it, son.
Hey, look, I'm telling you, man, dog. This is good. So yeah, basically, y'all, to try to keep it, because we'll get deep in a little bit, but you know, when you're a business owner, just don't upgrade too early, right? When you have an LLC, keep your LLC until you make 40K in net income. When you upgrade to an S corp, make sure you're running proper payroll, make sure you're doing everything you need to do. And then when you have extra money, again, like MG said, real estate is the most tax advantage asset that there is on this planet. Like, say what you want about Donald Trump as a president, but when it comes to tax, understanding tax law and mitigating his taxes, he does it through real estate. And it's one of the most tax advantage assets that we have. We're going to talk about why in a moment.
So, how do you, let's say if you have already, you have an LLC set up, you have an S corp, at any time, can you go about like just going into adding payroll? Like, is there something you have to contact your lawyer, or like, how does that work? How do you go and just pay yourself?
Yeah. So you want to get set up with a payroll software. I recommend Gusto if you're starting out. It's super cheap, super easy to use. The more employees you have, you might want to upgrade to ADP. But Gusto is a great, amazing payroll provider. So you have to sign up for a payroll provider, and then you have to go to your state website to create your profile for like unemployment taxes and stuff like that. So you have to sign up for your payroll software, hit your go to your state's website and sign up your business as an S corp there, and then you'll be good to go to start running payroll.
Solid. I mean,
and if you go to gustos.com/your state, they have a prompt that will walk you through how to set it up in any state you have for free.
Okay.
Yeah, setting up, that's very important.
Yeah.
Right? So you see how you get paid on Clockwork?
Yeah.
That's through ADP.
Right.
So once you go in, you set it and forget it. Like, so even like my salary is set and forget it. I don't have to worry about it. Like, it's set up. If I'm paying biweekly, it's 26 times the payroll's gone. It runs the payroll automatically. I get an email like the week before payroll. Hey, payroll's due. If you want to make any changes, go in and do it before this date. Mm-hmm. If I don't do it, then it'll automatically send the payroll based off of my settings for each of the employees who get payroll on the bi-weekly schedule. So it's super convenient. It's super easy. You as the business owner, you just got to make sure your bank account
has the
funds in it, because you don't want a negative. You don't want your payroll to bounce.
Yeah.
That's kind of embarrassing. You know what I'm saying? But let me ask you this, Carter. Now that we're talking about those accounts, right? How many accounts should a business owner have set up?
Oh man, this is good.
How many bank accounts should a business owner have set up?
Absolutely, guys. Before I answer that question, if you haven't read the book called Profit First by Mike Michalowicz, I call it like the financial Bible for entrepreneurs. So the book is called Profit First. I recommend every business owner have 5 business bank accounts, right? I know it sounds like a lot, but hear me out. And you can do these all at the same bank. So it's very easy to set up. You can set up all at one time, but you want to have one account for your income. So all your income flows into one account. You want to have another account for your expenses. All your flights, your travel, your Chipotle receipts come out of this expense account. You want to have an account for payroll, which MG was talking about. This is where your payroll comes out of your account. You want to make sure you have enough money in there to cover payroll. Fourth, you want to have a tax account. Saving for a future tax bill is imperative. Don't play yourself, right? So you want to set aside 20 to 25% into this tax account. And last is your profit or give account or investing account. I use this account personally to give. I give 10% of every dollar my business makes away to charity. You can have this account be for future investments or whatever, but you want to have those 5 accounts. Here's why this is so important. Number one, you're designating your money with the title. So every bank account you has its own purpose. So if whether 10,000 comes in or 100,000 comes in, you're dispersing money to these accounts based on a certain percentage. This another great reason. This is just for business credit purposes. A lot of y'all, when y'all go apply for business credit, y'all have one account, and they're going to ask for 3 to 6 months of bank statements from that one account. They're going to see income coming in. They go see flights coming out, travel coming out, all these expenses. But when you have these 5 accounts set up, the banks don't say which account statements you have to give them. So you can give the bank the statement from the income account, and your income account shows all this money coming in all month, and just these 3 or 4 transfers coming out. So you look like a more reputable borrower, and it'll help you get approved for loans as well.
Big Jim. I hope that ain't go over nobody's head right there. Big Jim, yo. Throw some gems in the comment for my man Carter, man. Throw some gems in the comment, because that was a real gem.
So, I have a question. So, how do you go about preparing yourself? Let's say if you want to get a house, or if you want to do an auto loan or something like that, and you know that you're going to look at your income. So, how do you go about filing your taxes that way in order to prepare yourself for that?
So, again, LLCs are what we call flow through entities, and S corps are as well. So, like, any money that the business makes is going to flow through to your personal return. So there's no such thing as saying I'm gonna hold this $100,000 in the business so it don't show up on my personal income. You can't do that with LLCs and S corps. So all the money is going to flow down to you personally, regardless. Okay. So again, if your business makes money, then you're good. Here's a caveat that some people run into, because I'm a proponent of paying as minimal taxes as possible. Right? Like, write off as much as you can to pay minimal taxes. The most common question I get, MG, I'm sure you get this as well, is, well, if I write everything off and I show no income, how am I going to get approved for a home or auto loan?
That was my next question. Yeah.
I've been here before, my brother. I've been here before. So, so what you want to do is you want to identify the year that you need to get approved for these loans, and just do them all in 1 year. So that 1 year, you're not going to write off everything. You're going to show more income. You're going to have to pay a little bit more taxes, but you get your home loan approved, you get your investment property approved, you get your car, you get whatever loan you need in that 1 year. Because then after that, we're going back to deducting everything and mitigating our tax bill as much as possible.
So is there a certain amount that you should, or it's just based on whatever the home value is, or even whatever car? Is there a certain amount of money you should have, showing as income? Because really, taxes are, you got to pay a lot in taxes if you write everything. If you don't write everything off.
Yeah, so it really depends on the type of loan that you want to get. If you're trying to get a loan on a $200,000 property, it's going to be less. If you're trying to get a loan on $1 million property, it's going to be a lot. You'll need to show a lot more.